So before we start, let's actually look at these beautiful mountains. Currently I'm in Crete and this is a beautiful island, and before we start talking about how to grow your small Forex account, here is some beautiful views that I want to show you. Crucial thing that you need to understand if you want to grow a small trading account is understanding risk management rules, understanding take profit, understanding stop loss, and understanding good trades management. So as you can see, everything here is absolutely beautiful. For those of you who are wondering, I am in Greece, in the island of Crete. Let's start with, for example, trade management. At first, the really important thing that you should do is always aim for high probability trades. Try to take only the best trades, because a lot of people who are just starting out, they want to make everything as fast as possible, scale to $1 million in a few months or even 1 year, which is not really possible at first, and they just start thinking about how they can flip their account from $100 to $100,000 in a matter of months, and that's not possible. You have to take a slow, calculated approach. So if we're talking about trade management, don't rush everything, only try to make as good trades as possible, because at first you remember that you are always risking to lose a little bit of money at first. So first of all, always make sure that you only trade the best opportunities. Coming back to the golden rule of risk management, never risk more than 1 or 2% of your trading deposit. You are confident in your trading analysis and you're opening a trade, then you can try to risk, for example, 2 or 3%, but never more than that, because in the end it's not sustainable. Even at the highest professional levels of trading, people are not risking more than 3% of their trading deposit, because they know that in the end it's not sustainable. And if you would be risking, for example, 10%, which is 1/10 of your trading deposit, which is stupid, that means in 10 trades you can get wiped out, which is really stupid. And if you would be risking, for example, 20% of your trading deposit, you can go on a losing streak of 4 trades and you lost 80% of your trading deposit, and that's almost impossible to come back from. So be careful right there, never risk more than 1 or 3% of your trading deposit. And in terms of trade management, always look for minimizing your risk. So if you are opening positions and you are in profit, set your targets and then you can move your stop loss to break even, or just in general minimize loss, so move your stop loss a little bit closer to break even. So then even if you're stopped out, you will either not lose any money or you will lose only a small amount of money. If you want to grow your small Forex account bit by bit, is the 9th wonder of the world, which is compounding. So compounding is basically when you add small layers of capital over a long periods of time, for example every single month for years, and you also get some return on that, so for example some interest rates, and after that basically your trading capital is at first going up slowly and then it goes exponentially if you are managing to have the same rates of return. So this is what really applies to day trading, and let me demonstrate how. Let's go to my phone and I will show you how I calculate rates of return. So for example, over here we can see that we can write our initial investment. $100,000 is what majority people can afford at first. So imagine you start trading with $1,000. Then you need to make a monthly contribution, so that means how much of trading deposit you are adding each month. So in this case, let's write $100. And then if in terms of length of the year, so imagine we're doing this for 20 years, so you're starting slow and then you are bit by bit, every month you are adding $100. And then the interest rate is basically, think about it in terms of trading, how much you can profit and then basically how much you can increase your trading capital. So imagine you are starting to be good at day trading and you are managing to pull out a 20% interest rate annually. So that means in day trading you are managing to day trade, to profit and to increase your trading deposit by 20% every year. Then we press calculate and boom, this is the result. After 20 years you would have $262,000. But what is even more interesting, look at this chart. It goes up exponentially, and that is what usually happens for majority of traders. They are starting slow, but they are slowly increasing their trading deposit. They are actually making some returns in the markets, and then boom, eventually you just take off. So let's talk about some strategies, some technical analysis tips that you should apply to your trading if you want to grow a small trading account. First and foremost important tip that I want to tell you is only take the best opportunity. And this is especially relevant for the beginners. They're usually making a lot of different mistakes. So they're usually trying to make a lot of trades, and they are not emphasizing the quality, but they're emphasizing quantity. You have to understand that you should take less trades, but the trade should be more quality trade. In terms of technical tools, what you can use is major trend. Major trend is understanding basically where the major market trend is going, and so you do not get caught up in a smaller trends within the major trend. Sometimes the markets may appear to go upwards, but in reality it's going downwards, and it was only a small mini trend within the major trend. So it is really important for you to understand major trend, so you are never going against the market trend and you are always trading with the trend. Another tool that you should consider understanding and mastering is market structure. Market structure is one of the most important things in technical analysis, and I explain market structure in details in this video, so I definitely strongly recommend you to watch it. Market structure will help you to never trade against the market structure, because market structure is the way the market moves. It's just the essence, the physics of the markets, so you should never trade against the market structure, and only applying this tip right here will definitely strongly increase your profitability. Another thing that you should consider is indicators. Indicators are a great tool. They provide you with a lot of information, so I cannot give you right here a definitive strategy, like what strategy you should use. This is not the video about that, because everyone has different strategies. I have my own strategy, other traders have their own strategy, and you can develop your own strategy that works in the market. You should never forget the risk management principles, and you should own. It doesn't matter what is your trading strategy, you just have to make sure that you include main things like major trend, market structure, indicators, candlestick reading, and all these essential things, and you will be just well to go.